So, traders, we've got a little bit of a market melt up today, and I'm going to give you your game plan for today. You can see on the daily chart, we had resistance for the SPY at 550. Market has been able to break above that, and it has cleared the 50-day moving average. Price action today is very steady to the upside. You can see tiny bodied candles. Why am I not participating in this rally? Well, I'm very cautious in here because I feel that we've got still big major pending news. We've got Amazon and we have Apple after the close today. Microsoft and Meta, big earnings reactions yesterday. In fact, if we zoom out just a little bit from this low yesterday to this opening this morning, we had about a 200-point S&P 500 rally. Usually moves of that magnitude are not going to go straight up. I suspect that much of this is program driven. We have Europe in an exchange holiday right now, so the volume is going to be a little bit lighter than normal, but you can see here, volume's actually okay. It's not horrible relative to what we've seen. So yes, Microsoft, Meta, excellent earnings reaction. So that's got tech in general moving higher. I am not able to mentally get behind this move because I'm still looking at what the longer term picture to me represents, and that is that this bounce is going to hit resistance and that the market is going to roll over. Did I expect the market to get above the 50-day moving average with this kind of ease? No, I really didn't expect that. But I'm largely sidelined. I've got a few stock short positions on right now. I showed you CELH yesterday. I've got a short position on in HTZ. That one's doing fine. CELH is doing fine. I've got a short position in J&J. That one's doing fine. We could take a look at all of them. These stocks have not really moved. They've got relative weakness, so I don't mind being short those stocks. J&J. You can see, still below all the major moving averages. In fact, down today. HTZ. That position is also lower than where I shorted it. So that position is working out. CELH, that position is just a little bit above where I shorted it. So what am I looking for? I am also short futures, by the way, and I'm getting clocked on that position, but it is a longer term swing position, so I'm not worried about it. Would a 200-point move against me be acceptable if I was day trading? No, it would not. When you're swing trading and when you're looking for 4, 5, 600-point potential moves, then a 200-point move kind of comes with the territory. You've got to give the trade some breathing room. So what am I looking for this afternoon and evening? I think Apple's going to have a fairly difficult time because of the potential of Chinese tariffs. Amazon could also be impacted. We don't know what those results are going to be or what their guidance might be in terms of consumption. So I don't think that we're going to see back-to-back huge moves higher in the market. I feel that Meta and Microsoft may have been less impacted, so I was looking for probably pretty decent numbers out of both. Here's the other thing, is that right now the tariffs have not had any impact whatsoever on earnings. None. They haven't really taken effect yet. So we're not going to see that until probably Q2. The other thing is that a lot of companies have imported ahead of those tariffs. So we have a glut of inventory right now, and that's going to reduce production now, and it's going to reduce production this summer. So let the market float higher. There's one benefit of staying sidelined and waiting for everything to play out, and that is that implied volatilities are declining. Awesome. That means that when the market finally does hit resistance, put premiums will be somewhat reasonable. And that is also why we wait for these big bounces. It's also why we take profits into these big drops when we're short, because option implied volatilities explode. And we want to exit those positions when the market is still searching for that support, because when it is established, you get one of these gigantic long green bars like that rip apart all your profits on the short side. So right now, I'm in wait and see mode. I just want to see the market start to struggle and start to hit resistance. When you have the first big drop after a bull market, you're going to get a big bounce. And the reason for that is that buyers are still conditioned to buy the dip, buy the dip, buy the dip. Oftentimes, institutions who are starting to take risk off will see things materializing out into the future, and that is what causes this first wave of selling. You also have asset managers and bullish speculators who are having to adjust positions very quickly, and that's when you get these big first drops that are typically overextended. Dust settles a little bit, and then everybody rushes in and, hey, it's not so bad after all. Everything's going to be okay. And so you get this nice, big, tall bounce. The next leg lower is the one that usually produces some pretty big drops. And the reason for that is that all the issues that the larger proprietary institutions saw coming, they start to play out. So once we get through all the earnings announcements, I think we're going to start to gradually this summer start to see the market roll over. And I believe that the economic numbers are going to deteriorate. We're seeing that weakness already. GDP came in minus 0.3%, and we had the first big pop up in initial jobless claims today, 241,000. That's the highest level that we've seen in over 2 months. So these numbers are just starting to creep in, and global economic weakness is finally finding its way here. And that has been the problem that I've been describing to you for the last few months, is that the global backdrop is the issue. The tariffs aren't the issue. The global backdrop is the big issue. So what do you do right now? Pete, you're short these futures for a longer term swing trade. You got a couple of stock short positions on. Market is obviously moving higher than you thought. At what point do you start joining that market bounce? You can day trade this from the long side, and I would day trade it from the long side normally, but today is different because we've got an exchange holiday in Europe, and this is just a seller's boycott as far as I'm concerned. I believe that this market rally that we're seeing today, draw a trend line along the highs. If we get a nice long green candle that pokes through that trend line that I've drawn connecting the highs, that is likely to be a buying climax today. One long red candle strips away all of these gains, and it changes the complexion of the trading session immediately. So what am I doing right now? I don't trust this move. The only way that I would have tried the long side today would have been if the market leaked lower and then had an instant bounce before it filled much of the gap. That would have told me that buyers are still engaged and that they're interested, and that would have presented a good risk-reward profile for me. But this gradual leak higher, tiny-bodied candles, nah, I'm not going to chase that. So I didn't get that early sell-off and immediate bounce that would have told me that, yes, buyers are aggressive. So what do? Nothing. I sit on the sidelines. I am going to be watching for the short side because that's where any day trade that I'm going to be taking right now would set up. Again, I want that upward sloping trend line connecting the highs. I want to see a long green candle through it, and I want to see that candle reversed immediately with a long red candle. That will tell me that there's resistance at that level and that I can consider the short side if I start to see a little bit of follow through selling. So I'm going to take a look at a stock that's on my radar. I am not trading it. I am just watching it. Qualcomm. You can see that Qualcomm, there's an upward sloping trend line right here. Qualcomm gapped down after announcing earnings. What has Qualcomm done this morning? Not a whole lot. You can see how it's sold off hard and it's staying on its low when what? When the market has been floating higher. That tells me that there is selling pressure in this stock. So what do? I'm just going to take and set an alert right here. And that way, if this stock rolls over, I'm going to know about it. I'll set another alert right here. And I'm going to wait for the market to do what I'm expecting. And I'll set an alert right there. And now I just sit back and wait. If the market doesn't give me anything to trade, I'm not going to fret that I'm going to miss opportunities on the upside, because I see this as a wimpy rally. I see this as a move that could be easily reversed, and I'll be watching for that blow off, that buying climax, and then I might consider trading, day trading Qualcomm on the short side. So that's the game plan for today. The longer term game plan, I'm going to let this bounce, run its course. I'm going to wait for those signs of resistance. Now, who knows? Maybe we get a really weak jobs report tomorrow. I'm not counting on that because initial jobless claims have been good for the prior 3 weeks. So the jobs report should be okay. Apple and Amazon, I don't think you're going to see the same types of reactions that we got out of Microsoft and Meta. And shorts are not going to stick their head in this noose because mega cap tech companies have been leading the market higher. They don't like to short before those big earnings announcements, but a week or so after that earnings announcement, and next week we have the FOMC meeting. Yes, if the FOMC statement is fairly hawkish, and the Fed has been hawkish, then I think the market is going to have a very difficult time rallying. And then over the course of the next 2 months or so, you're going to start seeing that weak economic news surface here. Tariffs are going to go up 10% across the board. That is a substantial number. And I think that fact has been discounted because there was talk of 25 and 50% tariffs. Yes, those are extreme. Those are not going to go into effect, but there are going to be some concessions made by other countries. So all of this is going to impact future production. We also have lots of layoffs on the government side. So in the last 2 years, 700,000 jobs were added to the government. We aren't going to have that 700,000 job growth in the future. In fact, we've got layoffs. So it's a double whammy. All of these things are going to have to play out. And so my mentality right now is not to get twisted by this bounce right in here, not to start convincing myself that, hey, everything's good. Everything's going to be okay. The market's just going to rally from here. No, this sell-off right here was legitimate. It was deep. It ran its course in about a month and a half, and conditions are going to eventually deteriorate, and we'll get that roll over. Oh, look, SPY has breached below one of the alerts that I set. So let's take a look, and you can see how the market is gradually starting to roll over. Let's take a look at what Qualcomm is doing. Is it selling off? Because that's exactly what I want the stock to do. If the market does start to finally show some signs of strain, I want to see that Qualcomm also starts to dip lower. And if it does, these alerts will be triggered and I'll have a decent short setting up. That's how I'm approaching the day. I hope this game plan helps you. Trade well. We'll see you soon.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.